Good morning, one and all, and welcome to this morning's video. I hope that you had a great and productive weekend. So, I have two pairs on watch today, and those are Euro dollar and Kiwi yen. So, Euro dollar is at the top of my list at the moment, and what I am looking for from this pair is if we just so Euro dollar is obviously the inverse of the DXY, the dollar index. If you didn't know that, you do now. Okay, so the reason I'm looking at this is because we were previously looking at shorts. Okay, so there's a little bit to unpack here. So previously we were looking at this here. Okay, we were looking at this high here, which was the start of all of this. We had the near miss to it. That was implying that that was a potential area of value. Okay, we tapped into the area, although it's important to note that we wicked to it and not through it. Price tried to sell off, and it didn't find enough liquidity in this area to send it to the downside. Okay, so we pushed back up. Price tried again to push to the downside, but all it did is consolidate up here, which once again suggested that there was not enough, even though we filled this wick, there was not enough orders up here to send it to the downside, and that this was just a sideways correction to push higher. Okay, and there was always the possibility of that happening. Okay, and us potentially coming up to test these highs because of how wide this had become relative to the move down which had preceded it. Okay, so if we are moving to the to these highs longer term, then euro dollar would naturally move to the downside. However, that doesn't mean, for price to get all of the way up there, all of the way up to these highs, it would likely need to still generate some volume along the way. Okay, which would mean a potentially a move down to here, to this base here, where you can see there's a near miss to this low, a potential move into that area, and maybe we get something like this, and then we start moving higher from there. Okay, especially because if we just look at this, there's something interesting to note here. We don't really trade retests as such, but what we do have is a lot of volume generated here. Okay, now why would price do what I've just done, what I've just suggested? It may push down into this area. One of the reasons is because it's currently retesting the back end of all of this volume. Okay, this is the base of all of this volume, so that could potentially mean that we could capitalize on something here. We could potentially capitalize on a move to the downside into this area, or if we're looking to, we don't actually trade the DXY, potentially capitalize on a move on euro dollar to the upside into, let's say, this area, because if the DXY was moving down into this area here, then euro dollar would naturally move up into this kind of area. Okay, so with that in mind, what are we looking for? And there are a few things to note on this, is that we have tapped into that area of value here, the start of all of this. Okay, the footprint that was left after we broke out of all of this. Okay, so I'm not surprised that we responded from there. However, one thing to note is if we just zoom out to the weekly, candles like this, okay, when you see what have we done, we've wicked to the area and not through it. Okay, when you see a bearish candle like that in particular that has wicked to the area, I wouldn't be surprised if this just drops out and potentially, breaks below, and then we push up. Okay, the other thing to note is that we've moved up, and that I am getting that indication from how price is moving. We analyze the nature of price. Price has moved up very correctively, so it wouldn't surprise me if price came down to do that, broke below, and then we start moving to the upside into these areas. But because we may just suddenly get a little bit of impulsive momentum, okay, because we do, what does the 4 hour look like? 4 hours still very corrective, but it would only take one candle to potentially negate all of this. And if we got something like this, for example, if we pushed up above here, there's a little inflection point here, which has some significance to it, because if we broke above that, okay, there's a little sharp move there, or the start of all of this consolidation. If we got some impulsive momentum and we started consolidating above here, we would likely be above these lows as well. Okay, so we would be above not just that inflection point, which could act as territory for the sell, but we would be back above this as well. Okay, and that's when, if we're consolidating above all of that, we could see that move to the upside there. Okay, because it would suggest that not enough liquidity was found here to send price to the downside. It would suggest that we didn't retest the back end of that in the process, which, if there was liquidity sat there, would be, we wouldn't see the consolidation sat above, because price would typically respond from that quickly. Okay, but because of the nature of price, because of that weekly close which I've just showed you, because we wicked to the area and not through it on the higher time frames, and because we've moved up very correctively, what I'm going to be looking for here is I'm going to be looking for a break above that area of interest, and I'm going to be looking for a tight 1 hour continuation, and then I would look to get long with a reduced risk entry or a risk entry within the structure on the 15-minute chart. I would filter this on the 15-minute chart, and then I would look to potentially capitalize on what may be a short-term move into that high there, because there's a sharp move there as well, so that makes contextual sense as well. Okay, I would just trail my stop in that instance, and we may, we could break, we might not stop there, we might move a lot higher, okay, to test some of these other highs. We never know what the market's going to do, so that's what I'm going to be looking for from this pair, and that is euro dollar. Okay, I wouldn't set a take profit in this instance just because we don't quite have 5% to the highs, but that's what I'm going to be looking for from euro dollar. And then we have, and I've set, there was an alert there. Yeah, there is an alert. There's an alert set just below the area of interest to see if we can break above that. If we don't, I don't need to check this. And then I've got another alert set down there to see if we come back down to fill that higher time frame wick that I was talking about. So I've just amended my forecast on Kiwi yen. Okay, so on the higher time frames, if we zoom out, we have this high here, the sharp area of volume. We near miss to it. We break above as we typically do, and then we move to the downside. So I'm seeing this as an impulse correction continuation to push lower to potentially take out all these lows, which this near miss to. And you can see here we have a near miss to that low as well. Okay, and that was the low that was created after we broke out of all of that volume. We have the little reversal structure up here, so a slightly strange sequence to start with. Okay, but we do have this 1, 2, 3 reversal structure which taps into that area of volume. We break out of all of this. We then have a consolidation sat below, so I'm seeing this as an impulse correction continuation to push lower, especially it has this low near miss to here. Okay, and as well, if we measure that, I'm pretty sure if we measure where the impulse started, which is around here, we take it to the base and we measure that, and we assume that the continuation leg in a 1, 2, 3 move tends to be, the third leg tends to be of a similar move that would take us down to there, which I'm pretty sure, if you measure it from there, takes us almost to bang on the 90% area, which is where price typically gets to, or the minimum that price gets to, before it's going to create something deeper or continue. Okay, so these are, as I've said before, mathematical equations, even though I've kind of crudely measured them. Okay, so we have the sharp move here. We have the gaps, the near misses to that high. We move down aggressively, and then we get that correction afterwards. Okay, so we're seeing patterns within patterns here. One thing to note though is because we had the gap to this high here, and this was the consolidation which caused price to drop out of all of this. Okay, so that was the area that I was looking at. However, price has tapped into that area and it's failed to commit. So what this could be is some kind of consolidation to do that, to push higher, to potentially retest these highs. And would price have a reason to do that? Well, it might do, because we have highs sat just above that we haven't tapped into, and we also didn't tap into we narrowly missed this high, narrowly missed the back end of all of this volume. Okay, so price does have a reason potentially to come back up, okay, to tap into those areas. So what does that mean? Well, what that means is, for me, that means if we break below the base of all of this consolidation here and we form a correction afterwards, that would imply that this bull structure has been negated for that move, which I just illustrated, and that would imply that we have tapped into the area of value. We've also tapped into this, the start of all of this. We've also retested, excuse me, if we're back below this area of interest, we would have not only tapped into this, and into this, we would have also retested the back end of all of this volume here. And if we consolidate afterwards, that negates that bull flag, which I was just showing you. And that would imply that this is just a continuation to push lower to potentially take out this low, which this low near missed too, and fulfill that higher time frame direction, which I was just talking about. If we get a correction under here, so if we just zoom back out again, okay, so if we push down and we're consolidating under here, the chances of this tapping into, the chances of it, the price tapping into this, and retesting the back of that and forming a continuation underneath what's a potential bull structure, and then just suddenly doing that after tapping into all that liquidity doesn't make contextual sense. So with that in mind, what I'll be looking for is a 1 hour impulse down below this area of interest, and then either a tight 5-minute or a 15-minute continuation, and then I would look to get short on the break or within the structure. And then we would have down to this low, we would have about 5%. Because of how much volume would be generated, I'll be looking to hold this down to this area here. And then what I would do is I would measure from there to there. I would set a take profit at the 90% area where price can pull back deeply, even if it's going to continue going. And then I would trail my stop loss at the same time. So even if price did react from here, we would still have something in the region of 4.5% to work with. So that is what I'm going to be looking for from these two pairs today. I have an alert set just to see if we break below this consolidation that's formed here. The reason we may have pushed back up, and the reason, just to touch on it, is because we tapped into this area, but there may have just been, let's just analyze this ever so quickly, there may have just been a few more orders sat just above here, which is why we've potentially scooped back up. Sometimes price does scoop back up, breaks ever so slightly above what it created before, and then we drop like that. Okay, so that's another thing to factor in. So that's what I'm going to be looking for from these pairs today. I bid you a great rest of your day. I hope this has provided you with some value, and I will see you again in the next video. Thank you very much indeed for watching.